What do I choose? What do I choose? You're looking for annuities and there are so many there, right? So you're looking at an indexed annuity, a fixed annuity, a variable annuity. What do you do, right? Those are the things that we're going to get into today. Eddie Gartner with Epic Financial Strategies. And so we're looking at annuities and you're trying to figure out, well, which one is the right one for you? So let's think about a couple things and what's associated with these annuities. And then really, hopefully by the end of this video, you'll have a better understanding and be able to make a better informed choice. When we're looking at an indexed annuity, there's a wide variety out there. So with any annuity, whether it's an indexed annuity, a fixed, or a variable annuity, the first thing I want to do is look at, well, what is the credit rating of the carrier that I'm getting involved with, right? Because the credit rating is talking about the financial stability of that company. And why is that important? Well, the idea of annuity is a long-term contract. So if I'm going to get into a long-term contract with a company, I want to know that that company is financially stable and the things that they're promising me, they'll be able to actually fulfill. Once I've looked at the credit ratings of the company, then I'm going to look at, okay, well, what kind of features and benefits are associated? When we're looking at fixed indexed annuities, there's a lot of different options and riders and different ways that they credit interest in these accounts. There's different lockup periods, right? You may have to hold your money in there for a certain period of time before you have access to it. And all of those things play a part in which one you're going to choose. So you're probably thinking like, well, how do I know what are the right options for me? How do I choose what rider I want to get? And that gets a little more specific, and I need to know more details about you to help you make those decisions. If you're working with an advisor, hopefully they can help you. If you need help with that and you want to speak to one of our advisors, click the link below. One of the team members will reach out to you and they can help you with making these decisions. But let's move on to fixed annuities. So we talked about the fixed indexed annuity, right? And that being fixed, it gets a little confusing because, well, what's the difference between a fixed indexed annuity and a fixed annuity? And the real difference is that a fixed annuity just pays a guaranteed interest rate. It's a fixed interest rate that you're going to get for the term of whatever that annuity is set for. It might be 3 years or 5 years or 7 years, and you'll hold your money with that company and they're going to pay you a guaranteed interest rate. That might be something that you want because you're really risk averse and you just want to know how much interest you're going to earn. You don't want your interest to be credited based off an index and have this fluctuation where, some years you may have the possibility that you get no interest credited. So in that case, a fixed annuity might be the right tool for you. Looking at what makes the most sense, well, with that fixed annuity, are the bank CD rates the same or similar, right? Do I need the tax deferral? So there's a lot of different questions you should be asking and thinking about before you actually put that money in. And most importantly, you really want to say, how quickly do I need access to that money? Because if you've locked that money up for 3 years or 5 years, but you need access to 30, 40, 50% of what's in there, you could face surrender charges. So definitely something to consider is how soon do you need access to that money. And then the last annuity that we'll talk about today is the variable annuity. And variable annuities, there's a lot out there about the cons of a variable annuity, right? Most things that are talked about when it comes to a variable annuity is the fee. And generally, there's a higher fee associated with that annuity. There's fees for the riders, there's M&E charges, there are expense charges in the funds, and all of these fees add up and they can be very high in some of these annuities. But not all of these variable annuities carry these same high fees. So again, when we go back to credit rating and looking at quality companies, the other thing that we want to evaluate with a variable annuity is what are the fees associated with that annuity, and are the benefits that I will receive from that annuity, do they outweigh the fee that you're paying? So that would be the real thing that you need to look at is, what are these fees and is it really worth it? Hopefully this video has clarified for you a little bit about the differences between an indexed annuity, a fixed annuity, and a variable annuity, and maybe you still have some more lingering questions, but you're not quite ready to talk to somebody yet. In the description box below, there will be a link to a video course that we've put out, 100% free. Go ahead and check it out. It's going to give you a lot more in-depth analysis on the different annuities, not just fixed, not just indexed, not just variable, but also immediate annuities that create income, deferred annuities. So there's a lot more content available to you. It's 100% free. Click the link and we'll see you there.